We want to welcome our next guest, David Kudla. David is with Mainstay Capital Management. He is the CEO, Chief Investment Strategist, and founder of the firm, and joins us from Troy, Michigan. David, good to speak with you. It is a Monday, so there is M&A this morning with, of course, the news that Kenvue is being bought out. And then we also have a lot of AI headlines. Once again, the $38 billion deal from Amazon with OpenAI. So the corporate news suggests a lot of bullishness, but we don't have any actual economic data. And we're kind of operating in a little bit of a vacuum here. What is your sense of how things are right now?
Good morning, Scarlett. Yeah, it's, we're seeing really this bifurcated economy. AI is driving the economy higher, lifting GDP because of all these deals that are being done. The hope for AI, which is going to become a reality. It's a matter of energy and the infrastructure and incredible amount of CapEx investment into the sector. And then we have, as the ISM data pointed to today, the ISM Manufacturing Index in contraction territory, which is that lower leg of the K-shaped economy. So we have elements of the economy that are almost recessionary, but we have AI that has so much promise and is creating so much investment and driving the economy forward, at least in that sector.
David, we're kind of about 60% of the way through earnings season here in terms of the S&P 500 companies reporting. Numbers seem pretty good. I've got an EPS growth rate around 11%. Is that enough to support these valuation levels, do you believe?
Good morning, Paul. Yeah, I think that what's been amazing about earnings, if we go back to second quarter, on June 30th, there was a 4.9% consensus estimate on earnings. We ended up getting better than 10% earnings growth. And we came into third quarter, we're at 7.2% earnings estimates. We're back up towards double-digit earnings growth. We've had four previous quarters at double digits, 10% or better, which is fantastic. So it's not just that earnings are strong, but we're beating expectations. So I think that's very positive for the market because, we trade on a lot of things in the near term for stocks. But over the long term, it's about earnings, and earnings are very strong and are continue to come in and beat. So we think that's actually one of the strongest factors we have going for the market trade, one of the strongest fundamentals.
So I think about the Mag 7 names and how Meta sold a massive amount of bonds after its latest earnings report, which investors didn't really respond favorably to. All that spending on AI not really paying off just yet in stock investors' minds. However, bond investors went gaga over the bond sale, and now Alphabet is looking to sell $22 billion of bonds in the U.S. and in Europe. Are equity investors and bond investors looking at these Mag 7 names differently?
Yeah, they're looking at it differently in that what it means for each of them. The debt that's being offered is being received well in the bond world, but for equity investors, the concern is how much of this capex can be met out of free cash flow, and that's where the concern is, and why they're issuing debt for these massive outlays, as much as $700 billion. Next year in 2026 for AI infrastructure build out. And there are those, you've talked about a little bit today on the show, the comparisons to the .com era, a lot different. The hyperscalers we're talking about are rock solid companies with wide moats, strong balance sheets, compared to pets.com and the types of companies that are being valued based on a number of clicks and things like that, I think as Paul was referring to back in the .com era. So it's really different in that respect because of the quality of companies that we're talking about. But the amount of investment and CapEx expenditure is just massive.
The one thing we want to talk to you, David, before you go, because we don't talk to too much, is gold. That's had an incredible run here. How do you position gold and some of these precious metals for your clients?
Yeah, we're tactical asset allocators, Paul, as you know, at Mainstay Capital Management. So we're go anywhere. We're not just the traditional stocks, bonds, and cash. And so certainly when precious metals, we have an opportunity like this with gold and silver. what we're calling the debasement trade that we think is just getting underway as fiat currencies come into question around the world, including the US dollar. We've seen what's happened with central bank buying, retail buyers, institutional buyers, and we think there's a long runway for both gold and silver. So we have one of our largest allocations ever into gold, silver, and the miners. And what that does for us, it's not only non-correlated with our stock and bond positions, it's negatively correlated with stocks. So we're getting a great diversification benefit in our clients' portfolios while we're getting exceptional total returns. You know, today the NASDAQ, gold and silver all up about the same, but certainly a day like Thursday, we had a sea of red for stocks, and gold, silver, and the miners did very well.
All right, good stuff. David, really appreciate your joining us. David Kudla is founder, CEO, and chief investment strategist at Mainstay Capital Management.